Hi everyone, and welcome to the Buffett and Beyond Saturday Stock Market Recap in February 15th, 2025. Folks, the month is almost more than half over. And remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So folks, let's get right into the market. And, well, the market wants to break out to all-time highs, and both the S&P and the NASDAQ are sitting right on their previous high. But will they break through with the real or new rally, I should say? We'll have to wait until this coming week to find out. Our weekly stock analysis video, well, Apple has been pretty amazing. It has doubled the S&P over the past 5 years, and the question is, can it keep up increasing those earnings at the same pace it has in the past over the next 5 years? Real big question there, but we'll see what AI has to say about all of that. In our ETF video, well, the NASDAQ and large cap stocks made a little run for all-time highs on Thursday and Friday, and our ETF top stock portfolios continue to dominate their respective ETFs. So yeah, we're doing pretty good there, folks, and all our portfolios are beating the S&P 500. And let's go to the S&P 500, speaking about that index. And here we have volatility bands, the top red one and the bottom red one. Middle line in the middle is the 20-day moving average. And you can see we had reversion to the mean and a rally, reversion to the mean, and then a rally and a reversion to the mean. And now we're taking off for that top band once again. And we are not quite at new highs, but boy, oh boy, are we close. So the thing is that with earnings season coming to an end over the next few weeks, will this index be able to break through up to this top band again and break past this previous high? Well, we'll see, folks. And down here, this indicator, which has been positive but flat, is starting to break up, and that rally on Thursday really gave good momentum to this index. So we'll see what happens coming up. And don't forget, our growth portfolio is up over 10% now, which is almost 3 times that of this S&P 500. So yeah, and all our stocks in that growth portfolio come from the S&P 500 and the NASDAQ. So, well, we're doing pretty good for a portfolio that's outperforming all the other portfolios out there. Now let's look at portfolio protection. This coming week, we will sell this February 21st put, or just let it expire. We will go out into May and buy the May put somewhere around 510, 515. We won't know until we actually do it on Wednesday or Thursday, or even Friday. And this way we're protected. This is about a $150,000 portfolio. We want to be protected in case there's some kind of big break in the market out there. You know, they can come at any time. That's why we're always afraid. And this is insurance about 12 to 15% below the market. So if we do get a scare like that, we don't have to panic. We know that our losses are limited as long as we have these puts in place. And we like to roll them out, so we need 3 of them because they each represent about $50,000, and for a $150,000 portfolio, we want 3 of these puts. And how do we get the money for put protection? And this is from our professional subscription. Well, we instituted a call spread as Apple gave us a buy signal from its recent decline. This position expired Friday and gave us an almost $900 gain. And we now have plenty of money for put positions heading into the summer and possibly through the summer. So we're sitting pretty with this rally this rather strong market that we've been having. And so it's given us a chance to see some of our favorite stocks take a little bit of a pullback, and then we go in and we will do some type of option call spread, a bullish option call spread. We like to do those the best because we have the best stocks in our portfolio. So the move to the upside for these stocks most of the time is a pretty good bet, especially when the market is going up and one of our big stocks turn down a little bit and then it turns back up. Then we'll do a call credit spread. So folks, we're in a good position here. We have plenty of money for our portfolio protection. And here is the chart of Apple. Look at this rise it had, and then it had this rather big fall, came back up, scared everybody, came down, and when we saw this, we thought we missed the move. But then when we saw this in here and we saw this positive movement in this indicator, and with this indicator down here giving us a real the first time buy signal here, which we didn't use, and then when it came back down, this black line did not cross over the red line, and that's when we put on our position, and it was just a week-long position, and we did very well with it. So folks, we had a good week this week. Again, the market is sitting near its highs, and it looks like it wants to be bullish, and we will see what happens with all the tariff talk and all the political rhetoric that's going on. But meanwhile, it's the weekend. Go out, enjoy yourself, clear your head, be with your family, sit in front of the fireplace if you're up north, go to the beach if you're in the south. But most of all, stay safe, and we'll be back to see you in a couple of days.